The yield curve inversion is something you've probably heard a lot about recently, with many investors worried about how this seemingly bearish occurrence will crash Bitcoin's price. But are investors right to be cautious, or is this fundamental event not as bad as it's made out to be? Today we're going to be looking at the yield curve inversion and its potential impact on Bitcoin. So where better to start than the Treasury yields versus Bitcoin chart. And for those of you that maybe weren't aware what the yield curve inversion is, if we just remove all of these Treasury yield charts apart from the 2-year and 10-year, I'll explain a little bit about what this Treasury yield inversion really is and why it may be getting some investors a little scared. So the Treasury yields are the amount of yield or interest paid out on government bonds issued by the US. And these bonds have different yields depending on their length till maturity. So how long do you have to hold them? How long until they expire? So the Treasury yield is specifically looking at the 2-year yield and the 10-year yield. And we can see the yields of them both here. And the inversion is when the shorter term 2-year yield is higher than the 10-year Treasury bond yield, which doesn't intuitively make much sense, because surely holding something for a longer period of time, having to lock in an investment for a 10-year period, should pay out a higher yield than a 2-year period. So this Treasury yield inversion does have a lot of investors worried. And if we go specifically onto the Treasury yield inversion chart here, or the Treasury yield spread chart we have here on Look Into Bitcoin, we can see here the difference between these yields and how it actually looks. So this inversion, like we said, is once the 2-year crosses above the 10-year yield, and we get this inversion here. So why are investors getting worried about this? Well, the fact that shorter term yields are paying higher than longer term yields doesn't signal much confidence in the economy. And if we look at something like this chart here, which is by the Financial Times, we can see that throughout history, if I just make it a little bit clearer here, these white periods here indicate an economic recession, and they typically occur following this Treasury yield inversion. So rightfully so, maybe a lot of people are worried about an upcoming recession. As we said, currently there is still an inversion. So historically, there hasn't actually been a recession until these revert and kind of normalize. But if we look here, we can see that this article was actually published in April 2022. So 18 months ago, as I filmed this. So a long time ago. And if we go to the S&P 500 versus Bitcoin correlation here, we can see that this strong correlation between Bitcoin and traditional markets, specifically US equities, has given a lot of people a little bit of worry and maybe a little bit more cautious with their investments due to their anticipation of an upcoming economic downturn. But realistically, like we saw with the article, the Treasury yield has been inverted for a long period of time, 18 months. And if we just look at the Bitcoin chart here, we can see if you were to have exited out of your positions, gone into safe haven assets like bonds and cash and maybe even gold, you'd have vastly underperformed. Just because that this fundamental event has happened doesn't mean you need to take drastic action immediately. If we go into the Bitcoin chart here, what I've done since 2018 is actually mapped out all of the returns of BTC during Treasury yield inversions. There's actually been 3 instances. Most people just see the one instance that we're currently in, but if we just look, there has actually been multiple smaller instances of Treasury yield inversions as well. So if we go back onto this chart here, we can see that Bitcoin during Treasury yield inversions actually tends to perform pretty good. If we actually just look at the figures here, we can see that Bitcoin during Treasury yield inversions has a daily return of about 0.184%. Whereas Bitcoin's standard returns over this period of time, since 2018, only returns about 0.082% daily. So quite a massive underperformance. And looking at the Treasury yields, we can see that once they reverted, there was a period of time where Bitcoin did underperform. But ultimately, I think the point of this video is just because there is a fundamental occurrence that many people are saying is going to be bearish and negatively impact the price of Bitcoin and potentially other assets, we can see here that Bitcoin has performed exceptionally well in spite of this. Maybe once we have the reversion, and maybe due to the correlation of Bitcoin with traditional markets, we do see a little bit of a retracement and we do see a little bit of a pullback. But ultimately, this may be nullified by the fact that we're seeing a large increase in global liquidity. We could see on the previous chart, the previous inversion happened as this was actually decreasing. And here we could see when the first inversion happened on this chart during Bitcoin's price history, it was again as global liquidity had pretty much flatlined. And as this started to rapidly increase, we actually saw Bitcoin's price rapidly increasing. And we've now seen this almost turn from Bitcoin's price bottom, we have seen this increase, but now recently we've seen this begin to trend very much to the upside once again. So just because something has happened historically doesn't mean that it's definitely going to happen again. We need to look at multiple other factors. We need to understand that potentially there could be a BTC decoupling. And really, if you'd have acted on fearful news events, fearful media outlets, and other potential fear-mongering on social media, you'd have missed out on pretty much all of Bitcoin's most recent exponential returns of well over 100%, just because you were anticipating a future recession, which could still be a year, 2, 3 years away. Really, we need to be more reactive and not predictive when it comes to our investing. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your #1 source for Bitcoin information. So just to summarize, a yield curve inversion occurs when shorter term Treasury bond yields, such as the 2-year, are higher than the long-term yields, such as the 10-year, signaling lower long-term confidence in an economy. And yield curve inversions haven't actually been an indicator of an imminent recession. However, once we see the yield curve reversion, once we see them normalize once again, it has often historically preceded economic pullbacks and traditional market drawdowns. So potentially going forward, we do need to watch this chart and be aware that maybe we are going to see a Bitcoin underperformance during that period of time. However, of course, there is the chance of a decoupling where we see Bitcoin begin to vastly outperform and the correlation to Bitcoin and traditional markets begins to separate. Again, this is predictive though. I'm not going to bank on that. Really, we need to be more reactive, like we said, than predictive. But ultimately, if you'd have acted on all the fear-mongering, all the negativity, you'd have seen daily average returns significantly reduced, like we saw. During this yield curve inversion, Bitcoin has actually performed significantly better than during the previous 5 years when the yield curve wasn't inverted. So just because, again, there are fundamental issues, just because there are people maybe looking at the economy and have a very bearish outlook predicting recessions and whatnot, you just need to look at the chart. You need to stick to the strategy. You need to remove your emotion. You need to stop, like we said, predicting what the future is going to be like. Every single circumstance of the markets is different. And Bitcoin being a new asset, we really haven't gone through this before. We don't know how Bitcoin is going to react in more uncertain economic conditions. So as long as you stick to the strategy, like we said, manage your risk, don't let your emotions get the better of you, stick to the plan. Ultimately, you're probably going to be performing considerably better than most. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the current yield curve inversion. Are you watching any other macro charts? Are you looking at any other treasury bond yields to try and gain some insight into what the future may bring? Let me know in the comments down below and on social media. I look forward to reading and replying to all of them. But like we said, keep in mind, markets can stay irrational considerably longer than you can stay liquid and sane when it comes to your investing and analysis. Thank you all very much for watching, and I'll see you in the next one.